Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 183. You get the Nasdaq off 73. S&P's down 18. Gold up $1.10 at $13.40 an ounce. Silver up 2 cents, $16.29. Light sweet crude 62.10. 62.10 down 24 cents. Notes and bonds. Bottom line, they were down pretty good this morning. Bottom line, they're getting a bid though. You get the 10-year note down 3 ticks, 120.08. 30-year bond down 6, 144.08. King dollar. King dollar is taking it on the chin after failing at a swing point. That's down 272, 89.525. The euro is at 123.20 to $1 US. The yen is at 106.13 to $1 US. So starting the week off, we get some bread.
Yeah, and there's a bunch going on this week. It seems the norm, but just in terms of stories out there, right? I mean, you have the Facebook deal going on.
Big deal with Facebook, right?
There you go.
It's about time. The bottom line that stock has held up, no matter how many stories are out there.
And they should pay the penalty, man. You're talking about millions and millions of people's data that wasn't supposed to be released, right? And, they say, whoops, our bad. And it's like at some point, to take in that kind of money, there's a due diligence that you got to do at some point. And it seems like they're definitely not doing it.
Well, it's interesting when you read the actual article. It seems that app developers could get almost everything at one particular point, and then they just trusted that they'll get rid of it afterwards.
Yeah, no, they said it was for academic, right? This one deal.
Right.
And in fairness, though, if they're signing contracts with Facebook, is Facebook going to go after them for $1 billion? That's where it gets weird. As in you can't go after them for that kind of harm that you can do when you give them millions and millions of people's data.
Well, we got a high volume low there, 167. It's going to be going after it. You're at 174 right now, down $10.50.
Yeah. Now Facebook is 4% of the Nasdaq.
Okay.
2% of the S&P 500.
Okay.
Pretty staggering when you look at.
Oh yeah.
And it should be because market cap wise,
Sure.
it's a behemoth for sure.
Sure.
Oh, I just see the headline next to it. Zuckerberg's fortune falls. That's probably going to be $3.8 billion. There you go. Yeah.
A billion here, a billion there.
Yeah, he's not worried about that. Let's
take a look at some of the other high volume stocks out here. You get Micron's up. Micron Tech's up 13 cents. Bank of America's down 7. You get GE down 14. Look at GE's going after that $13 break to 14 again.
Yeah.
Pretty wild.
How about Apple? Did you see they're creating their own screens, right?
Yes.
So, we've talked about this. Dave White's talked about it many times, and it is always intriguing how Samsung, they're so reliant on a big competitor.
Exactly.
And so they have a big space 15 minutes down the road from their California headquarters, and they're trying to create their own screens. And the articles I was reading, it's just amusing how it's no easy task. Even for a company that has the brightest minds in the world, more money than anybody, it's no easy task, which is just really interesting, right? That it is technology and knowledge that they have. And then they started talking about, so it'll at least be 2-3 years down the road or something like that. And then the danger, though, is that technology might be passed by then. And that's the worrisome thing, that, that are they just catching up to today's technology?
Right.
Amazing that it's that, but that's why they have Samsung screens. It's that hard.
And the intriguing thing for Apple, folks, is that, guess what? When you really get into the manufacturing process, now you're talking money.
Yeah, and it would make sense. I mean, they can't be that reliant on a huge competitor, just in terms of the risk that you put yourself in. With those types of screens, Samsung might hold them for themselves. Okay, you can be second in the market. There's a million things that could go wrong there.
There's no doubt.
For sure.
No doubt.
Interesting, yeah.
Let's go and take a look at that gold market. So gold right now is flat. GCJ, you're going to see out there, we went down to 1307 this morning. Right now you're at 1312. You get a nice rejection right now of the lower end of this consolidation, but I'd like to see it get back inside like the 1350. We got 1314, but you can see we had a spike down on February 8th. We had the spike down on March 1st, and then on Friday we came into that. You know, so I want to see it get in that larger range.
Yeah.
You know, we had the rebalancing of the indices on Friday, which put volume into everything.
Yes.
You know, particularly, you know, if you look in the XAU and the HUI, you're going to see some volume there. And that HUI, if you're a bull, you want to see that get inside this 174.19. It's been having a hard time doing it.
Okay, December 7th.
Yeah.
Okay.
That's what I'm taking.
Sure.
You know what I mean?
No, it's just, yeah.
Just because it's like, okay, that's...
They're all similar. No,
they
I mean,
are,
but that's
know.
like the good range. That's the highest of all of them, right?
It is.
Just back it up one more.
Yeah.
Yeah. Oh, yeah, because this one's a little under. Maybe that one's a little under. That one's a little under. But if it gets above here, it's above them all. And
right. And that's where the strength is on the other side, too.
Yeah.
You know, on the right-hand side of that big bar.
Sorry, can you...
I'm taking that,
okay.
which is the 174.19.
That bar,
see that strength right there?
December 13th,
yeah. So,
yep.
So we're going to get some action this week, folks.
Yeah.
Bottom line is that...
Fed on Wednesday, right? Right. What do they have, a 2-day meeting starting tomorrow?
Yes.
Announcement Wednesday.
Right, 2 o'clock.
All but certain being a hike. We'll see what the statement says in terms of going forward. You got a potential deal with Europe and England and Britain.
That's a big deal.
Coming out.
Yeah, let's go see what happened with the UK, the FTSE when that went on.
Yeah, I mean, Sterling was getting a big bid.
Oh, look at this.
Interesting.
The FTSE's selling away. Interesting.
Maybe that's the strength of
So
Sterling, you know, as in the strength of your currency.
Big time.
It's, you know, if our dollar just spiked huge, that'd be probably good for us in general, but yeah, the market would be like, whoa, man, that just is going to change the whole dynamic. Yeah.
You know, this FTSE today is going to be a big deal, folks. The reason being is that we're breaking your B point here. Oh, look at it, just missed it. It's actually 7,064. It's 7,063, I think. 7,063. Oh, 7,062.13. This is coming into it, though, with juice, man. This is what's so cool about when you look at the world. You know, we'll know at the end of the day if this breaks it with volume, okay? Bottom line, that sets up a probability that our markets...
Before you... Sorry, keep going. Is this in pounds?
Yeah.
So I think it is, right?
Yeah, I can put it in U.S. That's interesting, yeah. Right. That is in pounds. I wonder why it
yeah, usually it loads in dollars, doesn't it? Yeah.
No, that's a big heads up, though. That is a heads up, man. So you're still going after it, but it's a lot lower now.
Because that's what we've looked at it before, remember? And it was like, okay, if you're in Britain, it's not that big of a deal as compared to when you look at it from otherwise, and that's because of the currency deal, for sure.
It's a big deal now.
All right. All right.
Let's go take a look at the DAX and see what the DAX is doing. Look at this. This is interesting. So something happened with this whole setup. What's going on, folks? When I bring these up now, they're defaulting to the currency that
now they're in
it's in versus the U.S. I'll have to look at that afterwards. Yeah. That's intriguing. I guess that's the way it should do it. Anyway,
not really. You know? It depends, but.
Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. You have the Dow Industrials down 224. Nasdaq's off 87. S&P's are down 22. Notes and bonds. Keep your eye on those. They're going to be buying those notes and bonds, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 213. You get the Nasdaq off 86. S&Ps are off 22. Let's go over to the Nadex platform. We are going to be taking a look at the Bitcoin weekly spreads. And if you haven't test drove that platform yet, folks, real easy to do. Just come to our website, hit the banner, pull it up. They'll put $25,000 of paper money into your account so you can walk along with this as we look at these defined option contracts. And, of course, Bitcoin has been always pretty cool since they started these, well, it's cool periods to trade.
It's got some volatility, that's for sure. Today is no different. Today to the upside so far. I mean, we're down 6 in the morning at about 8,100.
Yeah. From
there, we're up almost $600. We touched 8,700 in this 5-minute bar. We're at 86.66. So normally these have been $10,000 in its entirety, right? So this week it's an $8,000 spread. The reason being it's declined so much.
Right.
I mean, you can't have a $10,000 spread every single week if it keeps dropping down because it's supposed to be similar risk to the downside to the upside.
Yes.
And at some point you're going to get to a level where
of zero.
Yeah, the percentage-wise loss is just going to be too dramatic to the downside to go 5,000 down, 5,000 up. So this week it opens at 8,100. You got 4,000 to the down, 4,100, 4,000 to the upside, 12,1. And right now, even with it a little bit skewed towards the upper side of that spread, Bitcoin right now 86.81, and you can see, give or take, it's $20 on each side bid offer, which is pretty cool.
It really is.
Yeah, because if you're selling it right now, you know, you have risk reward in your favor, which is pretty cool.
Yeah. So
yeah, these are going, so we'll have to get into this as well, and these are where you want to get used to it, and as it gets to lower levels, things do change slightly, where it might be one coin for coin right now. We're going to have to get into this, because one contract right now, you see the risk reward, it used to be 1 for 10, right? But guess what? One contract right now is showing that it's actually dollar for dollar, because they've lessened the entirety of the spread. It's now $8,000 up or down. Is that right?
No, because we have 4,000. Yeah, right. It's like a half a Bitcoin.
You're right.
Almost,
thank you.
Right?
Yes,
yeah,
perfect.
Right,
okay, that's why I was lost. Yeah. So it's half a Bitcoin.
Which is pretty cool.
No, it is.
Yeah.
It is. That's why, because it had gone to a full coin before. Because I had 1 to 10.
That's right, because I bought 10 contracts for a full coin.
To be a full coin.
Now it's only going to be 2 this week almost.
Correct. Same dollar value, though, that you're putting up.
Oh, yeah, that's right. That's right.
Yeah.
Right. Okay.
But so, yeah, correct. So for every dollar in the price of movement in Bitcoin, you have 50 cents of movement in the contract price, which is why. But again, because it's, you know, at 8,100, you'd have equal risking 2,000 to make 2,000. because we're near the upper end, if you're selling it, you have risk only to 12.1 while you're selling it at 86.55. So that's your loss is a little bit less than 2,000, and that's going to be your profit. And that's nice when you're not really paying any premium.
I know.
As opposed to if you're buying it here, right? It's the reverse. It's kind of against you.
Yes.
And meanwhile, you're not absorbing any premium for a risk reward, not in your favor.
And you're not paying that much premium. They're only $10 on that side, but I understand what you're saying.
Right. No, for sure.
Right.
And you can see it is a little bit skewed where it's $10 to the upside above and about 25 to the downside, and that's because of this risk reward.
Right.
Yeah.
So let's bring up, we'll see.
Kind of contract volume?
Yeah, let's see what we got, because we're getting used to this contract volume as to what we're pushing up. Like, it was 17,000.
It was, and that was a little bit later in the 10 o'clock hour, just to put it, but...
So we're at CBOE's 4,500 coins and CME's 1,700. So that's what
8,500 about on the CME, 85.12. So we're about 13. That seems pretty good. As in, by the time we pull up in another 20, 30 minutes, maybe we'll be up there.
That's not bad for a beginning.
Right.
Now, you know, I was saying to Tommy earlier, he had asked me if I was selling it. I said, oh, I want this thing a lot higher to sell it. And you know what this is? This is not even. I mean, I don't even have a analysis underneath this, but I just don't want to sell Bitcoin like 8,600.
Mentally, no.
Yeah, do you know what I mean?
I mean, look where we are on the chart, right? Look how much action has been above that level versus below.
Right. It rejected that price, man. So, I mean, it looks like it has a shot for the top now. I mean, that's the reality. You know, it's like, and I don't want to buy it because I don't have that much faith inside.
And that's only 2 weeks ago. It's only March 5th.
Right.
Literally 2 weeks ago.
So maybe I just got to wait another week and a half to get it up there and see what happens.
And as we do that, let's take a look at some of those other cryptos, because I'm curious where Ethereum is trading. This man Paul from Nevada.
Yep.
548. We're below those levels, and look where we were. So check that out.
Look at that.
So I believe that
maybe I'll sell
5th,
Bitcoin now.
So this is the low we were looking at with Paul last week when he called. Okay, that's the low that correlates.
February 5th.
That correlates to Bitcoin being at under 6,000. That was when Ethereum traded to 565, and man, quite a run that we got down to 455. And that's on Friday. Is it calling it Saturday? I guess March 17th, but 18th. Yeah. So these days are set a little bit differently.
Yeah.
And let's just drill this down to like an hourly and see where we are. There we go. So, yeah, this is the 18th. And so that's yesterday at some point.
Okay.
Yep, it's about yesterday at noon.
Yep, I see. Okay.
That is quite a decline. And then percentage-wise, you're talking about almost $100 off of that low for 20, and that's why it's showing right now.
And you know, it's intriguing too, is that like not that the volumes, bottom line would be just on that exchange, but you can see that they flushed it down. Even when you look at a stock chart, a high volume flush down, you can see that it sticks out like a sore thumb. It's like, okay,
totally.
So
yeah, supply and demand. I mean, that's what moving these markets in a big way, right?
Yep.
Yeah, but green across the board in the cryptocurrency arena for sure today, so far.
Yeah, totally.
Yeah.
So let me pull this intraday too. Oh, look at this. So if I just looked at this, this one's the higher price. Let's see, that's 7,600. Man, that's $1,000. So that's saying 9,600 can be game here.
And I was just going to correlate so this is Friday.
Yeah.
This is Monday. We don't have the weekend here.
Right.
And so Bitcoin was down there as well when Ethereum was down there. This is just literally last night. And then the Nadex spreads are getting set at about 8 in the morning.
Yes.
So you can see we're right at about 8,100.
Yeah.
That's why that price level is getting set at 8,100 for the 4,000 up and down on either side.
Pretty wild.
It is. Hey, volatility without a doubt. Maybe we'll get some to the upside this week.
Yeah, and then that's what it looks like.
Yeah.
And of course we got the Fed. The Fed is what's going to be intriguing with the Fed is that what is that statement going to be all about? What does the market do today and tomorrow before the Fed?
See what it's doing so far, right?
They're claiming that the market's not going to have anything to do with their decision, but I can tell you, they're all in the market. Everyone's in the market.
Sure.
Okay. It's where those interest rates go make a big difference.
Sure.
So let's go over take a look at the they're and I'm sure this is here. I know we can do it this way first. What I was going to say is that Facebook is killing this NDX. Yeah, 5.5%.
It's a big number on a big company, man.
Yeah, it is. And then Clack is down 3.6. That's been a big time
for sure.
mover top
Symantec,
side.
it's a big company, down 3%.
Yeah. Yeah, see, this is going to be a failure on price and volume of that high volume spike from January 25th. It's not quite back in the lower range. Well, there it is, actually. Well, let's take this one. 114.42. 116, I guess, 62 gets you in there.
I mean, you can anticipate we're coming into another election season.
Yeah.
And Facebook just keeps dealing with bad news. And the political advertising, no matter where you fall, that should be regulated, because every political advertising is regulated for a real reason.
Yeah.
And I wonder how fast politicians are going to start to move on that with the light of the news this weekend and politics coming right back around. And I'm sure the market's factoring some of that in.
We're in it.
Even if it's just rhetoric, where there's meetings, there's, you know, is Zuckerberg going to be in front of the Congress?
Oh, yeah, because
that won't be good for the price, no matter what.
Because what you're going to see, folks, the vote is going to be people putting money into Facebook or taking it out. Sure. Right now, they're taking it out.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go take a look at some of these commodities out here and see where we're at commodity-wise with this dollar giving it up a little. It's not doing much for commodities. So we got wheat down 2.8%, hogs are down 2%, beans are down 1.8%, crude flat, really. Well, yeah, down 0.3. Yeah, there's not much here.
No.
Let's go over to this wheat market for a second. Wheat's been on fire, man, on the way up. Let's see what we have here. Well,
I think you're living in December through February, right?
Yeah.
Man, that was a tough March. Wow.
Yeah, so March 2nd makes a high of 5.18 a bushel. And coming back quick, man.
Oof, seriously.
It's quite.
I mean, percentage-wise, yeah, you're talking about $70 on 520. It's a good 12, 13, 14% somewhere. I mean, yeah.
Yep. We'll put this on a continuous contract. Whoa, baby. Okay, so let's see what we got. Well, yeah, this is pretty intense. This is saying we can go back to 421, basically. That's where it come off. I'm doing the highs of the lows over
Sure.
there.
And I was just going to jump around. I mean, seasonally, and I don't know the seasons of wheat at all, but it is interesting as you come into beginning of the summer, call it, right?
Yeah.
June, check out that decline, right?
Yeah.
Somewhere in June, July, check out that decline. We're a little ahead of the curve right now, but guess what? We're not coming into a good season, as in once you get to, you know, it's...
So let's put that back like 3 years or 4 years. Just on
sure. You just quick run.
We'll stay with a weekly, see what it looks like. Ooh, that's interesting, isn't it? Look at that. Okay, so...
And again, look at that decline in June there, right? I mean,
so that's all...
Look at that decline there.
The plantings...
It's not automatic.
No. The plantings get done, and
but you want to keep it in mind. I mean...
Right. Yeah.
Doesn't scream strength as you come into the summer.
No, it doesn't.
Yeah.
It's not even close.
Right.
In fact, it's quite... That's December, first one. That's 2014, but that one's July.
Yeah.
The high there is July, 615. Next high is June.
Yep.
524. Next high is July.
And then go back to 2014. I mean, that's right there. I mean, quite a decline.
That's May. Yeah.
Right.
Yeah. Now let's bring this back. We might as well go with 5 years.
Sure.
Look at that. Wow.
Yeah, so it hung up there a little bit the previous year.
It's been going down for a while, man. I'm just going to put 10 years on it. See, when you put 10 years, it gets interesting because, you know, it's like, okay, are you trying to base out here?
We hung at these levels for a while back there.
And it's rejected 431. At 451. I'm going back to 431, folks, is 2009. 501. Oh, interesting, though. See, it's still below 501, too. That's
no, let me see. I was just curious. If you price this in, like, euros, is that going to change?
Yeah, no, it will change.
Yeah, so pretty similar, even. Okay.
Yeah, but that is good to know. I know.
Because part of this is like, what's the dollar doing to this, right? As in terms of 2012 when it made that run to the high and so forth. Yeah.
Totally. You know, there was a article, and I got to really get my head wrapped around this again. I read the article twice already, but
third time might be the charm. No.
Yeah, to really get to understand the fundamental behind it. So, what the article is about, and this is in the journal on Saturday, folks. What the article is about was the issuance of short-term debt, our Treasury short-term debt right now, right? They've never issued so much short-term debt. And what they're saying is that what this article fundamentally was about was that they're letting the dollar fall apart. And the only way that they can sell so much short-term treasuries is that the dollar is going lower. But listen to what the person's theory is here, and this is why I got to read it again. The theory is, okay, you're a buyer of the short-term treasuries, right?
Okay.
That if you're so sophisticated that they feel that Mnuchin and the Treasury is driving the dollar lower in the aspect of they got to push the short-term debt out. In the aspect that there's going to be at a certain point that they're not going to drive it lower anymore, and you just got a deal because then the dollar will be higher. And I was looking, I said, so, man, they're banking on quite a bit.
Okay.
If that's the case, you see what I'm saying? So the article writer was saying that you are actually buying debt at a certain percentage point. But the Treasury is selling to the aspect that this dollar's not going to go down forever, and it's going to go up, and you're going to make money on the interest and on the dollar.
Okay.
But guess what? It's been going down.
Yeah, right.
You know, so that's why I got to read it again.
Sure.
I mean, but that's the theory inside the aspect. So it's like,
how many people are going to be interested to buy short-term U.S. debt, banking on the fact that the dollar is going to go up? That's an interesting element.
It is in itself.
I mean, that's a great sales tactic. I'm just like, it would hinge on the fact that people buy, like, as in buying what they're selling.
Well, they keep rolling it. They keep rolling, like, the 30-day and the 90-day. And so people that do that, like big funds and, you know, countries, okay, they're figuring that at some point it's going to roll. And said, at some point, it's like, yeah.
I don't know, did you happen to see on 60 Minutes last night, they had the Saudi Prince MBS.
Oh, did they?
Yeah.
No, I didn't. Was it good?
It was a great interview, and he talked about the whole crackdown, and all that stuff, and it was a pretty cool interview in terms of he's a young guy, 32 years old, and seems, and he's on a PR swing right now, so all things in context, right? Yeah. But part of it is where he realizes that they're not going to be printing money off oil forever. Right. And they can't get away from that in terms of taking in investors for Aramco and all that stuff unless they end some of the corruption, because they need to get away from the oil state that they are.
Right.
And so that was kind of what he said, and they said they were losing like $10 to $20 billion a year, I think was the number.
On corruption?
On corruption, yeah.
Yeah, right.
I think that was the number. I should get it, but it was billions, 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 no matter what it was. Right. And you can't have a public company with investors with tens of billions of dollars just disappearing off the balance sheet.
Right.
That where to go, we don't know.
Yeah.
So it's kind of interesting to see
I'll YouTube it. Okay, that's good to know.
It was a good interview. People should check it out for sure.
Yeah. Because it's that IPO's coming at us. The real question is, what are they going to?
And that's where he's in the States right now. I mean, I think he's going to be at the White House.
So they're ramping it up.
That's right. Yeah. I mean, so he's on his PR pitch, and that's why I take it for what it is in the context. But there's some validity to that as well, if that's it. You definitely didn't want to be in the Ritz, though, when they were pulling the lockdown in Saudi Arabia.
Seriously, man. Seriously.
There were allegations of physical abuse. Who knows? There were everything. Who knows what was going on over there, for sure.
And if we look at the light sweet crude, bottom line is it's hanging out here. Well, this is interesting. We didn't get any juice on it on Friday, so the consolidation's still in place. It's not like it wants to go to 64. I mean, I think the deal is still a lower end of consolidation, but what very well could be happening is that this is the beginning of the push to get that out. Because if he's pumping it, because what's so surprising is that when they get these all set up, and I've said this before, then all of a sudden it just happens that Goldman and Morgan Stanley come tomorrow. Okay, we're doing it in 3 days. Because they And
one of the other parts of the interview that they talked about, though, is like, okay, you're clamping down on everybody else. And they're like, well, what about you? And then they went over how we just bought like a $500 million yacht, and a French, like, castle or something, and so it's like, of course you're going to lock down everybody else, but the public won't like that if it's disappearing in any capacity, and who knows?
Yeah.
Is that right? Yeah.
Good for everyone else.
Oh, yeah. Well, good for him, right?
One thing, folks, if you're in power and you're taking anything, you better never get out of power, because as soon as you're out of power, they take you down.
They're not going to. The Saudi king isn't going to be out of power for.
Oh, no, I'm not. I'm just.
No, I know in general you're saying, but he's got a lockdown, man. And,
Stay right there. Tommy and I come right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. The Dow right now is down 194. Let's go inside the Dow and see who the culprit is out here today. So, point-wise, Caterpillar, 27 minus points, 3M 22, Goldman 17, Apple 13.
There's a few of them, for sure.
Yep.
On the flip side, you got Boeing, which is the only practically stock putting more than a point into it. And even then, Goldman on a Boeing on a percentage basis is up $1.71 for a $332 stock. Nothing, you know.
And put 11 points
But it just so happens it's a $332 stock, so it's up $1.70.
Yep. Let's go look at Goldman. So Goldman's 265. That's been, you know, it's kind of classic top. You know, we'll see whether that's going to be it. You know, first high, what's that? The 29th of January, 3.8 million. High that we're talking about is 273, hit 273 again with 3.1, hit 275 with 3. So you got 3.8, 3.1, 3. Oh, that's deviant, man. And then, you know, hey, the bottom of this consolidation, we're going to go for this, you know, and that's a long way down.
No, I mean that's when the market was going crazy. That's when the VIX was at 50.
Right.
You know, I mean that's the February 5th.
And that's a one-day buy. I have this on the 5th, folks. Yeah. Goldman went from 263 to 241.
Sure.
And then came
the day
down.
Before it was up above 270.
Yeah.
Just to put, so 270 to 240 in the span of 2 days. But then what did it do the next day, right?
Yep.
Right back up to, no, the day, nope, one back. I was just saying right after that, it comes almost all the way back to 258 and closes at 258.
Yep. And then gives it up again.
Yeah.
So this is going to be, let's go look at the VIX, because it looks to me the way this is setting up.
Okay. It was at about slightly. It was up at 1675 at 9 a.m. when I was doing the update, and the market said there was a sell-off as it opened, you know, so some acceleration. But yeah, you can see right as coming in here, where are we? Yeah, so getting ready, 9 o'clock right there, just under 17. And as we come into the open, you know, we're sliding. I think the market was only down about 150, 160, pre-market 140, and then of course now we've been flirting around 200 for pretty much the entirety of the show so far.
TLT, that's down 18 cents right now, so there's not much action there, but that did get over the highs last week. 10.1 million, it didn't have the volume, but got over those highs. So let's go to the 30-year, because it's going to be all about bonds Wednesday.
Yes.
144.12. This is a good rejection, a lower price. Okay, so this is you're coming into 332,000. You've done 122 thus far. This is saying once higher price, man. This is going to be wild watching this thing shake out, man. Because, you know, 2.854 And we've been hovering here for quite a while.
Yes.
That's on the 10-year. On the 30-year, 3.08. Look at the 30-year is 3.22 high.
Yeah.
Boy, that's a big number.
Yes, the 30-year was about 0.14 higher than it is right now. The 10-year was about 0.1 higher than it was, and that was on a 3-month basis.
Yep.
Yeah. Which I think is still like the highs, though, if we went to.
Oh yeah. No, and what we have here, this is early. What's the 10:30?
Yeah. 10:45, but yeah,
we're getting some downward pressure. You get more downward pressure in this market.
Nasdaq is a big number, and that's not going to change with Facebook being down 5+%, and with Apple being down a big number, both of them.
Yeah. So let's go over to the NQs. They're down 114 there.
It's a big number, man, percentage-wise.
It is. And they just, okay, so this is cool, meaning that we can see if we broke with volume. We might have an ABC down here. So, yeah, we broke with volume easy. The real question is, where's the A point on this? Let me see, if I put this on 3 days, I'll put it on 4 days. Yeah, this is going to be wild, man.
Kind of the open of Friday, or where?
Yeah, I'm just going to say conservative, like say today.
Last night.
Yeah,
okay.
You know what I mean? It's like, because you could go up there for sure, but it's like, okay, that's 7,041 down to, it's 100 points. It says 69.38, so it's 100 point. Conservatively, that's 68.73, and we're at 69.31.
Yeah, it's less than 60 points.
Yeah. Which we know that
we're down 112 right now, so
right. That's right. And what you also have now, the thing with the NQs, they not only got back inside this range, but you have the high volume low from March 2nd that hasn't been tested yet. That's 67.76, and the high of that is 68.47.
Say that one again, 66.76.
66.76, yeah. And what's going to be intriguing here is that, see, the high of that is 68.47?
Yes.
I think we just did that. Wasn't 68.41 like the...
68.67 was the 73, was the low.
Was it?
Yeah, 68.73.
No, I mean the projection on the way down. 68.73. Okay, cool. Yep. Okay. So that's going to be a good number to keep your eye on.
Yeah.
You know what I mean? Because that's where you might get a bounce out of. Yeah. Let's go look at the E-minis. Let's take a look there. And what you did have, inside the NQs and the NASDAQ is that you had a big gap away. So there's 6 days that are an island top out there, which is definitely significant because the people are trapped like rats out there. So this is down 24 bucks. You're at 27.31. This probably took it out with volume too. Yeah, it did. Okay, so let's make this. I'll do this for 2 days. Okay, so even if I just take the top of today, right?
Yep.
It's interesting. This one I'd really go for Friday because it's such a. I can see the line better. But I'm not going to do that. But I can see the line better. Meaning,
they don't trade all weekend though, so that's where
they don't. They don't. And
that's
ABC,
not a fair chart sometimes,
right.
As in it just happens to gel a little bit from where Friday to, as in this isn't. There's stuff in people's investors' mind that was going on in between here.
Oh no, there is. It has to do with what I'm saying. It has to do with a straight line. Sure. ABC's a A to B straight, and that's a straighter line. But we're not going to take that. We're going to take the one from today.
Sure.
So 27.56. Oh, that's a big one, man. 22 bucks. That gives you 27.23, right? We're almost there.
Yes.
We're at 27.31. So 27.33 would be the number inside.
About 9 S&P points.
Yeah. I know.
Yeah. Yeah. We'll see. Nasdaq down 100. Dow down 220. Yeah.
Yeah. And let's go over to the gold. So gold, I really want to see this thing catch a bid. I don't want to, I know it's rejected lower price out here, but this is still at a point that, I need this thing back inside 13.50. I don't like it just sitting here. I don't like it.
Right?
Yeah. Let's go to silver. We'll take a look at silver for a second. Silver held up last week, but that silver needs a sign of strength too. So it's 16.25 on silver. Yeah, see, this tested the lows, but the longer this stays here...
It's right there.
Yeah, it's not good. Wait, the lows we're talking about, the low of this consolidation, 16.21. We've hit 16.20 today. On March 1st, you hit 16.16. Well, we need some action here. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down 223, Nasdaq down 101, S&P's down 25, and you get some heavy selling pressure for this early in the morning.
For sure.
On a Monday. Stay right there, folks. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Folks, we have the Dow down 241, Nasdaq off 111, S&P's down 27. Now, you know, this Nasdaq, you're down 1.5%.
It was a quick 12 Nasdaq points over that break. We were down 100.
Yeah.
2 seconds ago when we just broke to commercial.
You're talking serious business here. So, and it's interesting, as one of our tigers say in the den, we might have some buyers on the dip who go long, who went long at the open, and if not a rebound, watch out. There's no doubt. What happens, because people have got rewarded so many times, you know what I mean? And we'll know that when we get later in the day, but that can be a real problem.
Can you jump to Apple real quick? Yep. I think they're accelerating as well. They're done 234, 227 now. Intraday?
Yep.
Yeah, so the
just
lows.
Next
and how about Facebook as well, just to see if they're driving it down? One more. Yeah, lows, literally lows of the session.
Yeah.
So that'll do it.
Big time,
Those two keep accelerating.
And what you have, so watch this, you know, with Facebook now here, this is the March 2nd low.
Okay.
172.99. We hit
right
173. We're going to hit it.
Yeah.
Okay. You get the expansion of volume. Now we can get the heads up on this, folks. probability-wise is this. My take is we're going to the February 9th high-volume swing low because a few of the stocks have, well, here, ExxonMobil was blowing it away last week. Let's see where that is. Look at it.
Yeah.
So there's the low, 73.90. We hit 73.53 last week, and, you know, bottom line, it's laying there. That says quite a bit that your probability is high, but now you got Facebook down there. Let's go look at Amazon quick. That's got a long way, but I'm just curious as to what kind of juice is happening. Yeah, nothing. 21 bucks. That's nothing.
They're in a different world.
They are in a different world, man.
I mean, there's some news coming out that they have a new platform for gaming development that's
really
not a part of the web, but it's part of it because it's all part of it.
Right. As we're handing this off to swim lessons, folks, S&Ps are down 29, Dow's off 253. Stay right there. We get swim lessons. I'm Matt Basil Chapman, Dave Rhodes, Steve Rhodes, Dave White, myself. Thanks, pal. Wow! Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great